Today's guest has over 30 years in the game, raised over $1 billion, advised on over 10 billion in commercial real estate transactions, and built a digital capital raising system used by sponsors across the country. Adam Gower isn't just a thought leader. He's a system builder, an educator, and strategist who's helped thousands of investors and operators make smarter and more scalable decisions. This one's for the capital raisers, fund managers, and entrepreneurs who want to build something that lasts. Adam, welcome to the podcast.
Thank you so much, Leo. It is an absolute pleasure to be here.
We're excited to have you on. So tell us, just quick minute summary of what you do just for the audience to have some more context.
Okay, sure. So these days what I do is there's two things. I build digital marketing systems for sponsors primarily who want to find more investors, raise more capital and scale their businesses. So that in a nutshell. A simple term for that is think of it as a crowd. It's not actually the right term, Leo, but a crowdfunding platform. So if you think of a crowdfunding platform, we build those for our clients so they can elevate their visibility and attract inbound investors.
And tell us about your journey thus far. So how did you get here? What were you doing from, I guess, the beginning of your career until now?
Okay. So that's a longer story. It'd be hard to put that into 1 minute. So I will run through that because I imagine based on what you and I have been talking about today, that there'll be some things that will emerge that you'd be interested in.
Definitely.
So I actually started in real estate, I hate to admit it, actually 1982. So it's actually over 40 years. Can you believe that? I don't like to admit it because it makes me seem so old. That's why I say 30 years. But I actually started by pulling wires for an electrician. I was a laborer, basically. So I was very hands-on, and I learned a lot doing that, but very quickly migrated into raising capital for a ground-up multifamily sponsor in Southern California. And in those days, this was in the 1980s, so I was in my early to mid-20s. There was a lot of Japanese investment in the US. And so I raised a lot of money from actually primarily from Japanese investors. There was then a massive downturn. It became known as the savings and loan crisis that started at the end of the 80s and really reached its peak in 91, 92. So the company I was working for collapsed. And at that time, Leo, when I left, so I was 26, I'd been working there for a little while, and I was a multimillionaire on paper. And it evaporated. I mean, the whole thing it all went to zero. So that was my first experience of why this time is different, which is a term that I heard in those days. I didn't even know what different from what. I didn't even know what they were talking about. And then it all imploded. So that was my first experience of a major downturn. And my investors invited me to go to Japan to help them with workouts and managing, what was going on. I had a very good relationship with them. So I ended up in Tokyo. I learned to speak Japanese fluently and was hired by Universal Studios to run Asia Pacific for them. So I ended up doing all their real estate across Asia Pacific and in Japan, negotiating contracts in Japanese, believe it or not, and holding press conferences in Japanese. My Japanese was really good in those days. A bit rusty these days. I haven't used it for much. Then I came back and I started doing my own developments. And in 2007, as a general partner, and they were ground up entitlement deals, ground up developments on infill sites in Los Angeles. And 2007 hit, so there was serious turbulence in the market then, all around subprime mortgages originally. And I got nervous, so I sold out. I sold everything and then the market collapsed, like right before Lehman Brothers went belly up in, I think it was October 07. I was brought into East West Bank Now, East West were one of the largest regional banks in the country, actually, headquartered in California. And one of my investors was on the board of directors. And so he introduced me to the chairman, and they hired me to help them clean their balance sheet. They'd done a lot of real estate collateralized lending, and a lot of those loans were failing. So my job was to work on those loans. So that was now the second time that I went through a massive downturn. This time was slightly different. The first time I lost money, and I only saw what happened to ground up multifamily. This time at East West, I saw every asset class. I mean, really every asset class. They lent across the board. And so I saw how every asset class can fail, actually. And so I did about $1 billion there and selling notes actually to investors. And then was brought into Colony Capital, where I worked on, they had partnered with the FDIC on, when I got there, about $7 billion of non-performing loans from failed banks. So my job over there was to, package these things up, help them reperform, and then sell them in packages to banks. So I did that for a while. So it was actually for me, the global financial crisis was very good because I had no legacy problems, and I had a lot of knowledge. Can I get to where I am now?
Yes.
Yes. So shortcut to that, 2012, the Jobs Act passed. And by this time, the market was beginning to tick up. So all the distress stuff was going away. And so I was out of work again. But that was okay. I'd done well in the GFC. So I started investing in I joined an angel group, angel and seed investing. And so suddenly I was in front of all these 20-something-year-old kids who were talking or speaking in a different language. And it was the language of digital marketing. It was something I'd never heard before. Google Analytics and SEO and all these CTRs and whatever. It was all these acronyms I'd never heard of before. It was fascinating. That was a consistent theme. It didn't matter what business they were in. They were all building their businesses using digital marketing. So when the Jobs Act passed, which allowed sponsors for the first time to solicit from people they didn't know, it opened the doors to advertising and digital marketing. So I put two and two together, and I thought, okay, perfect. I can apply what I know now in digital marketing. Actually, I will learn digital marketing, and I will apply it to capital formation for real estate. So that's kind of how I started about 10 years ago.
Oh, that's amazing. Thank you for sharing that. What a journey. I felt like I watched a whole movie.
It would put you to sleep. You'd need plenty of popcorn if it was in a movie version.
Yeah. No, I love it. And I think one theme struck out to me a lot was that you had a lot of good foresight when you're going through these decisions. It seemed like you knew, at least when '07 hit, you knew to get out. And in 2012, you saw that this would be the upswing. So you went from distress, well, you went from short to long, right? You
Yeah.
went to the long digital marketing and all that. Walk me through like your decision process. How do you make these big decisions? Do you have a framework? Is it just based on your feeling or
It's a really interesting question, actually. So I'm going to answer that in two ways. I'm going to take notes so I don't forget. So there have been times in my life, Leo, when I have wondered what to do. And so I've embarked on impossible tasks. And the first impossible task was learning to speak Japanese. I remember people saying to me, what are you going to do with that? You're like, why? First of all, you're an older fella. So when I started, oh, actually, I wasn't that old. It was 91. So it was, late 20s, early 30s. But why are you going to do that? Like, what's the value? And I said, I don't know. I don't know what I'll do with it. But when I can speak, I'll figure it out at the end. Another good example of that was I got a PhD some years ago. And that was also a huge lift. I mean, it wasn't like an online thing. I went to one of the top schools in the world, was heavily examined by some of the top professors in the world, was sent back to rewrite part of it. It was very intense. And I didn't know what I was going to do with that, but I figured out what to do with it. And it was a huge life-changing event to actually undertake what other people said were impossible tasks that were incredibly heavy lifts without knowing exactly where they were going to lead. And they've always turned out well. As far as the 2007 exit, when I sold everything and went to paid all the tax and went to cash, that all I can tell you about that was there was no calculation. There was no, it was gut. I had a gut feel. I had these deals that I was developing and raising money for and getting debt on and negotiating with banks and working with general contractors and architects and engineers and the city. And I was waking up in the middle of the night with angst. It was something that just didn't. So I just thought, I'm out. I need to sell out. And so I switched and I decided to sell everything. And I don't know what you call that, if that was instinct or if it was just dumb luck. But I literally sold out the summer before Lehman Brothers failed. So 3 months before they failed. And oh my goodness, that was life-changing. Because if I'd have stuck in, I would have gone bankrupt. My life would be very, very different. But instead, I went into the global financial crisis not only with cash and knowledge and intel, but also with no legacy problems. And it was the legacy problems that slowed everybody else down. So I was able to move at incredible speed while everybody else was, or actually at the same speed as I always go at, but everyone else had slowed down. So that's how I was able to pull ahead during the global financial crisis.
That's fascinating that you say that, because I think we as people, we sometimes discount to luck what actually has a logical reasoning behind it. So interesting that you mentioned the gut feeling. It is actually a scientific thing, right? So our decision-making process has been refined through our near infinite experiences. We learn when we're in the subway, we learn when we're at work, we learn when we're out anywhere, when we see certain things, and all this data point just get digested into our gut, and then we sort of formulate some sort of feeling from there. So I think you're onto something.
Well, maybe. And I think you're probably right. It's an interesting kind of bordering on philosophical discussion. It is interesting. You probably don't want to ask me what I'm doing now and what my gut is telling me should be doing now.
Yeah,
I'm happy to answer that question preemptively if you
I'm
want.
curious now.
And I am actually literally re-engineering everything around this, a complete shift in exactly the same way as I've done in the past. But I actually think that we're heading for something significantly worse than the global financial crisis. So I'm selling everything again. I'm selling assets and thinking, should I even do 1031 exchanges? So if you do a 1031, what you're doing basically is you're saying, okay, I'd have to pay, call it 30% tax. So instead of paying that tax, I'll do an upleg. I'll invest in something else, save that tax, and then it'll grow. The only problem is, and I'm not going to apologize for these thoughts, I'll be straightforward with you. The only problem is, if, like me, you think that the market for real estate across the board, and I will make some exceptions, I think your asset class is very interesting, but in general, if you think that the market for real estate will collapse by 30%, you won't be ahead. In fact, you'll be locked into something that you might not want to be locked into. And that you have, unless you take on extremely low debt, that there's a possibility you could actually lose. So I am right now wondering, not only, well, actually actively selling, but also, and it's a struggle actually, because the tax bill is so high, thinking about not doing 1031s, not just literally paying the tax and putting cash in the bank in preparation for what I think will look worse than the global financial crisis. And I'll tell you something, I told you that during the GFC, I woke up in the night with angst. This is the same. It's not quite as sharp as it was then, as I experienced it then. This time it's a kind of a medium level continual angst, not something that wakes me up. It's just like continual. So anyway, so that's what I'm
So
working on.
what's drawing, I mean, what are the main factors that sort of add up to this feeling for you?
Yeah, so a lot of it has to do with the current administration's economic doctrine. And I don't want to get into politics. I have strong opinions about politics, but the way that I like to communicate my view of political climate is through the lens of real estate. Okay, so it doesn't matter whether what you think about the policies and whether they're good or bad. That's irrelevant. What's relevant is what is going to be the impact on the overall economy, and by extension, what's going to be the impact on commercial real estate. And I think that that we're going to see significant economic harm done to the economy for myriad reasons. I mean, to me, I wrote a post on LinkedIn not long ago. Always black swan events occur, and then and they come out of the blue. This one, we're watching it. It's happening live in real time. And I see people kind of wandering along, still talking about life as though everything is just peachy in real estate. And, it's just going to be like it has been forever. Hard assets are the best place to be, and earn passive income and build wealth and gain financial freedom stuff. They're all cliches. If you look, you don't need to look that deep to realize, no, this time is different. This time is different. Not in the way everyone says. Everyone says this time indifferent means it's not going to go down. No, this time you can see it coming.
You know, I think when you mentioned that black swan events will happen seemingly out of the blue, I'll take it a step further that I think we underestimate the systemic risk exposure that we have by just living. A lot of these black swan events happen really and once every few years, right? There was what, 2020, 2022.
Right.
These will just come and people will say that, oh, it's a once in a lifetime thing, but it always happens in a different way. There's always something going on. And I think if you zoom out, that because of where society is, we're so interconnected, and with AI, it just further speeds the progress of change. I think change will happen much more quickly. There will be little breaks here and there. It's like the machine is just building up a little bit too much pressure here, and a little bit of crack and a little bit of air comes out, and you sort of see these little things here and there add up.
Uh, yes, I would agree with you entirely. I don't think they're little things that are happening at the moment. These are like monumental shifts that are happening, which is why, to me, it seems blindingly obvious that we are experiencing a black swan event. So the way that I try and characterize this and to rationalize it in a way, in terms of commercial real estate, is I worked for a fellow some years ago, a fellow called Goodwin Gore, GAW. So he runs this shop called Gore Capital. They're a Hong Kong Chinese family, and I worked for him. I ran a fund for him actually right after East West Bank and before Colony. And what I learned, and he was an institutional investor. So I sat in these meetings with pension funds and endowments, and we presented the investment thesis, and then he raised billions of dollars. I mean, it was a really incredible environment to learn in. And one thing that I learned from him, amongst many, was that when you underwrite a deal, you should always underwrite it three ways. I characterized it differently. I was more cynical. The three ways, my cynical view was there's three ways you underwrite: one for the bank, one for the investors, and one for you. You got three spreadsheets: one for them, and one for you. But Goodwin described it in a different way. You should always underwrite a deal for best, worst, and most likely scenario. Best, worst, and most likely. So when you underwrite to a worst case scenario, if you are a prudent investor, you will ensure that you will survive that worst case scenario. You will not lose the asset. You will survive the worst case scenario. So that is how I approach kind of the political discussion. When I speak to somebody who thinks that everything is going to be absolutely wonderful economically, okay, that's fine. That's the best case scenario. Well, I'm good with that. How are you underwriting the worst case scenario? What assumptions are you actually building in to your underwriting and presenting to your investors that is the worst case scenario? Right? So what is that? I mean, that's kind of rhetorical, but that's how I kind of characterize this.
Speaking of Hong Kong, I
Mm.
just thought of this quote from Bruce Lee. He says, "Be water, my friend." Right? And I think it has so many applications that even in investing, I think it's important to be egoless. You're not out there to prove yourself right. You're just out there to see where the world is and connect the dots and go to where you think you should go to meet your goals. It's not about politics, it's not about administration, it's about how do you reach your goal based on your knowledge of the playing field.
Yeah, gosh, yes. We start to get into some quite, we agreed not to talk about a couple of topics, and this is not one of those. But the other is you're kind of prompting me to think about to think about some very personal thoughts. Look, this is a tough time. I've been speaking to investors recently, and I share these views, and I start off by apologizing for them because I don't want to seem like a doom and gloomer and just terribly pessimistic or anything. What kind of guy is this? But the reaction that I've been getting has been incredibly positive feedback. It's almost as though folk are relieved to hear somebody articulate what they're thinking about how to invest. And not sure what to say. We're still flooded with all of these, positive vibes. I don't know how else to say it. And you should invest and hard assets and et cetera, et cetera. This is actually, so I like I said, I do think that we stand on the precipice of a potential depression, not a recession, but on that precipice. So maybe I'm wrong. I think about my worst case scenario. What's my worst case scenario? Paying the tax, going to cash and sitting on it. Well, my worst case scenario is I was wrong. Okay, everything's wonderful. So I'll buy again. Okay, so what? I missed out on some profit for a while. I can live with that, right? I can totally live with that.
I'll,
Yeah.
I'll jump in because I think you touch on an interesting point about resilience. Because when you define your worst case scenario, hypothetically, it can only be better from there. So it's almost like you define, the term put your back up against the wall. It's not that out of desperation, but just defining where your wall is. That way you can figure out how to move forward. You can sleep well at night because as entrepreneurs, a million and one things can go wrong. And you want to sleep well at night so you can make good decisions. So you sort of have that framework of here's my wall and here's how I'm going to move forward.
Yeah, that's right. What is the downside of taking this approach, right? And that's how you should look at real estate as well. What is the worst case scenario and how do I insulate myself away from it? I remembered my thought. So if you do think, as I do, that we face the prospect of, and it's actually a very interesting line of thought, actually. If you do think in this way, that we do face the prospect of a depression, not a recession, I'll call it a very deep recession, how do you prepare for that? Right? What should you be doing? How like how do you no one was around in 1929, right, that can talk about it,
Right.
right, from the Great Depression. So I decided to research it. I did, I have a PhD, so I like to get into depth. I love history. So I did some in-depth research. Who really triumphed out of the Great Depression? What did they do going into the Depression? Well, what were they doing? How did they manage during, and how did they emerge? And you know what's fascinating, Leo, is that what they did and the tactics that they employed, they are uniform. I saw the winners of the Great Recession, the global financial crisis of 2008 and so on. The same people that prevailed and triumphed during that time, they employed the same tactics and approach to what was going on in exactly the same way as those during the Great Depression did. So that, and actually, somebody said to me, yes, but every recession, every downturn is different. The characteristics are always different. That's true. But the way you survive them and benefit from them, those skills, those are uniform. That's a golden thread that runs through all of these downturns, is how you deal with them. And so you can learn from history. You can learn from history.
So what are the some of the other patterns that you see of winners during times like this?
So one is, so some of the kind of the big ones, the easy ones, don't take on too much debt. You absolutely you have to be able to carry a building or a property even if your income stream collapses. So you've got to have low debt. That's what's the killer is debt, right? When markets freeze up and people stop paying and you're stuck having to pay, you're going to lose it. So you've got to have low debt. It's good to have cash and reserves, much more probably than you imagine you actually need, and good to have cash flow if you can get it. So that means extremely conservative underwriting. Now, there were some other things as well that, so I think that's probably the number one thing is having liquidity and not having too much debt, not having too much obligation to paying out of that cash to somebody else. It's really important.
And I think to extent of what you mentioned earlier about the psychology is that I think psychology is more important than people make it out to be, especially when it comes to money. Because, there's this phenomenon in trading stocks that people know. You can analyze a stock by fundamentally or technically, but a lot of people forget the psychological aspect of trading. And I think it's the same with money. Money is just, I mean, it's a store of value, but how we behave around it, how we spend it, how we sell, invest in different things greatly depends on our psychology and our mindset.
It is. I mean, it's panics. You talk about runs on banks, right? I mean, this is people panic, and there may not be any logic behind it. One of the things that I learned at university, my undergraduate degree was I just adjusted my brightness without looking at myself there a little bit. So my undergraduate degree was political psychology and political crowd and media psychology. There was a very interesting book by a fellow called Gustave Le Bon, who wrote in 1898. He wrote a book, I think it's called The Power of Crowds or Crowds and Power or something. I forget exactly what it was called. And he described a crowd as behaving as a primitive man. It behaves in a psychological way as a primitive man. So if a primitive man goes out to attack something, right, and we were talking like Neanderthal kind of primitive man, a crowd will behave in the same way. So if part of that crowd moves in that direction, the whole crowd will follow, right? It's the crowd behaves in that way. And when you look at how advertising works, when you look at how social media works, when you look at how propaganda works, when you look at how political messaging works, it is designed to trigger those primal experiences or those primal instincts that we have. And we move in crowds. It's one of the biggest problems that we have in society at the moment is this bifurcation of society, that the way communication is enabled and the way that we're able to communicate in and ingest communication allows us to be hyper selective. And so we gravitate to a crowd that thinks the same and that behaves the same and that wants to do the same. And we lose our critical thinking, right? We lose the perspective of the other side and we become intolerant of it. And we become primal in our response to what's going on as a group in our own, you're either blue or you're red or whatever it is. Oh, and by the way, you know where I saw this? It's funny because you have blue and red in American politics, right? Red Republicans, blue Democrats. I grew up in Manchester, Northern England, two teams, Manchester City and Manchester United. United red, City blue. And I used to go to the football matches and we were packed, like so tight. The crowds were so tight, you couldn't get your hands up. Because you think about getting your arm into this position, you were so packed, it was difficult. So by the time you got your hand up above your head, you couldn't get it back down. And that's why you'd see people clapping and cheering like this all the time, because that's where your hands were. Those crowds behaved like primal men. They moved in that way. And I experienced that while I was studying this kind of psychology in real time, in person, in these crowds at football matches.
You know, they say humans are smart, but people are dumb.
That's interesting. I would say that humans are smart, crowds are dumb. Yeah, in the context of what we're talking about. En masse, we act and do stupid things. Individually, we know what's good, we know what's right. But in a crowd, we make bad mistakes.
For sure. So transitioning sort of onto the real estate realm and what you do on the capital side. Speaking of crowds, what do you think is being overhyped right now, or maybe underhyped in capital raising or real estate in general?
Right. So leaning into what you do a little bit, I think that you have to look at resistant economic downturn resistant, like seriously resistant asset classes. And you've definitely got to take, again, I don't want to contradict your business plan or be weird or anything about that, but I think you've got to take on low debt. What is being hyped, and I see this a lot in, I spend, as you know, a lot of time on LinkedIn. I'm very active, and I communicate and have a deep insight into what people are doing. I think there is a total blindness to the reality of where this economy is going. I see too many people pumping up hard assets. Yeah, there's definitely truth to that. But in a significant downturn, it doesn't matter. It's not going to help you. If you're not prepared properly, it doesn't matter what you've invested in. You're going to lose it. So you've still got to apply the same disciplines no matter what you're doing. And I see that there's just this oblivion. It's like people are oblivious. There's one guy, I won't mention his name. There's one guy that I see talking about, passive income, build wealth, and gain financial freedom all the time. He's an extremely young fellow. And I actually, just this morning, I thought, oh my goodness, I see me in this guy. This guy, he's going to go through the same thing that I am. And if only he'd listen, I could help him avoid that. He will go through the same thing that I went through in the 80s, late 80s. And so I think that people don't really, they think this time is different and that everything's going to be okay. So that's the hype. There's a lot of hype, right? A lot of money is still being raised and a lot of the messaging is still about, these cliches about how great real estate is and you can retire and live free and, it's going to live on a beach and it's all passive and you don't have to do anything. Right. Um, so that's, I think, on the negative side. But there are some voices that are speaking sense. They're just not quite as loud, unfortunately. And you've really got to dig for them, Leo. They're out there, but they're sophisticated voices. And on the surface, and people don't want to hear the bad news, right? They don't want to dig into it. And you've got to oversimplify things as well. How do you simplify bad news, right? I mean, how do you do that without being sensational about it? And this actually is a struggle for me personally. How do I communicate the way I think without being a sensationalist? And actually, I'm thinking I might actually lean in that direction a little bit. I think people really need it, actually.
Mm.
What do
I
you
think
think?
I think as long as you speak your truth, that's what's the most important. I feel like a lot of people nowadays, they just like to repeat what they hear, instead of digesting that thought and figuring it out, how it applies to their life and how they would digest it and pass it forward. So, like you said earlier, there's a lot of people saying, oh, passive income, low risk, whatever, things like that. But maybe, yes, the right deal can be structured that way, but not every deal. Like you mentioned with debt, that is 100% what happened back in during COVID, right? A lot of other deals went belly up because they just had too much debt at too low of an interest rate. And then afterwards, after that systemic thing happened with the interest rates going up, they weren't prepared for it. Back to my earlier point, I don't think people are properly underwriting the systemic risk exposure, that they're out there.
Yeah, I would tend to agree with you, but we're definitely getting into a bit of doom and gloom here. Uh, yeah, but
So,
mm,
so speaking of pivoting, because I know you were mentioning that you were basically, I mean, you're in so many different fields in your life. You went from an electrician to capital raising, you made it all the way up and then down again, right? So how were you able to pivot with more enthusiasm and more energy, or just the right mindset? Because it seems like you're crushing it at every juncture in your life. It's not like it slowed you down or anything.
it's not easy. What your question prompts me to remember is how I learned to speak Japanese. So one of my investors, my prime investor, when I got to Japan, uh, helped me set up with an apartment right near where he lived with his family. Took me into a bank, because I needed a sponsor, somebody to, what I was, I needed a local sponsor. Took me to a bank, set me up with a bank account. We walked out of that bank, and he said to me, Adam, this is the last time I will ever speak English to you again. He was the only person I knew in Japan. And so I had to learn to speak Japanese very quickly. And so I immersed, like total immersion. Uh, and um, Can I make a long story longer a little bit? It's actually how I was educated, Leo. In England, I had a world class education. Basically, I went to one of the top schools. I went to London School of Economics. But the way that we were educated was very different from the way that I came to learn Americans learn. We were we were graded on how we did in one exam at the end of the year. Period. That was it. So it didn't matter how much homework you set in, how you did in that homework. There were no tests. If they were, it didn't really matter. One 3-hour exam at the end of the year, and that defined 100% of your grade. Consequently, I did naff all for 10 months. Basically, I'd scribble, I'd be still doing my homework when the teacher was walking into the class. Here you are, miss, I've got it, master. Here we go. Like nothing. And then 8 weeks before the exams, I went into total focus, total focus, like nothing for 8 weeks, cramming everything I should have spent a year learning. And I passed everything. I got to one of the top schools in the country. I got my degree doing it that way. And what I learned was that actually, I learned actually only to that I only perform well when under intolerable pressure and that I can sustain that for more than 2 months. I can actually sustain it over years. So when I learned to speak Japanese, I totally immersed. I didn't speak, read, write, or listen to English for the first 6 months. I was in classes for 6 hours a day. In addition to that, I hired a tutor who spoke no English to speak to me in Japanese. I mean, there's a lot that I had cassettes. I would record the morning 5-minute news bulletin, translate it with my tutor who spoke no English, write it down in Japanese, and then put it on constant loop. And I'd listen to that all day until I understood it fluently. I even let it play when I slept. I wasn't sure if it would actually, I don't know if that made a difference, but I'd heard it might. And so total absolute focus, absolute immersion in achieving a task. That's how I've dealt with any situation, really. Yeah.
That's that's actually really great because there's this analogy that Naval Ravikant says that people should work like lions. They should rest for pretty much most of the time, and then when they see a prey, they should amp up and put in everything they got until they reach it. And then they're back to rest again after they feast.
That is fascinating. Who was it that said that?
Naval Ravikant.
Naval Ravikant. That's interesting because um, it's funny. I'm super excited to be here, and I've got a lot of energy, and it's a delight to see you. I really enjoy
That's
meeting
great.
you on LinkedIn and our conversation earlier this week and today as well. So don't get this wrong. But there are times when I look at my calendar like I'm exhausted. It just looks like I'm burned out. I've not got much energy. And I look at my calendar. He picks up his paper calendar. I look at my calendar to see what's going on. And I realize that I've got to do like I was on a live webinar, or I've got to, speak to a client for an hour, or I've got a conversion call that I've got to do. And I just don't feel the energy. I actually I don't know if I've trained myself, but I've become adept at switching it on when it's required, knowing that it will end, right? I know that it's going to last this long and it'll be over and I'll be done. But I go from total exhaustion to total focus and total engagement and high energy for a burst of time. And then as soon as the lights and cameras go off, collapse again into a heap, basically. It is a skill. I was actually thinking about this with, okay, he's just left. I got a tile guy. I'm doing some work. I'm working out the house, and there's a tile guy. And every time I see him in the morning, I ask him, "How are you doing?" Out of 10, and he tells me, he says, I'm a 7 today, or I'm a 6, or I'm a 9, or I'm a 3. And I haven't said to him because he's a tile guy. Well, but what I think of saying to him is, no. When you're in front of your client, you are always 10. When a client asks you, "How are you doing?" It doesn't mean that you are lying about what you're doing, right? I mean, the tile isn't going right or it's not quite right. You can be straightforward about that, the challenges. But you want to have high energy in certain circumstances. So it's the same thing. It's this lion. You got to go to red alert. It's the same in martial arts. Not that I do that anymore. But I remember training with a guy who said, you have to know when to go to red alert. And that can happen instantaneously. If you're in a situation, you need to know, okay, I'm on red alert now. I'm ready to fight. That's your lion example.
Hmm. I think having that ability to switch it on is fundamentally super helpful. What you said just reminded me of this study that was done on Tom Brady. I don't know if you've heard of this, but at halftime, if he's losing, his cortisol goes down 20% and his testosterone goes up. And he is dialed in, focused, in it to win it. So how do you train that? How did you come to develop this skill? And how do you keep it sharp?
I think that I really do think that it was because of my education. This and it wasn't. I was definitely not taught to do this. So I guess the answer to your question is it kind of comes naturally to me because this is funny. It's a funny idea, but actually, deep down, I am bone idle. I am super lazy, but I work incredibly hard to avoid work. Do you think that's it that way? And that was kind of I was definitely at school for like 10 years old. I had to sit through 3 hour exams. So to get into the schools that I went to, this kind of they're called public schools in England, but here that's private school. To get into private school of the caliber that I went to, I had to sit exams. These were 3 hour exams. There were English exams, math exams, history. There was all kinds of just to qualify to get into these schools. I took those at 10 years old, Leo. 10 years old, I was a little kid. I had tutors. It was unbelievable. 3 hour intensive exams to get into these schools. And when I got into school and I realized all I need is to do well in the exam, I figured, game on. I'm just going to have a good time for 10 months. I'm not going to pay any attention. I'll show up. I won't be rude. I'll get by. My teachers will tell my parents, he could try harder and all that kind of thing. And then I went into these bursts of intensive, immersive study. So it's something that has always come naturally to me. It's something I've always done. I will also, just to continue this thought, I've also realized in recent years, as I have reached the age of, whatever, maturity or whatever you call it, I've actually realized it's a lot better not to do that. Actually, focus on a task, even if you can't finish it immediately, you've got a task coming up, start it, get a good bit done, come back to it, build on it. And then when it comes to the deadline, you look at it and you think, oh, goodness me, I'm 90% done. Oh, what a relief. And it's so much easier that way, actually. But nevertheless,
Maybe the grass is always greener.
yeah, you adapt, right, to your
Right.
circumstances.
Right. So, one last question before I move on to another topic. But so you mentioned intense focus. How do you get into that level of focus? Do you have routines or frameworks that you do?
So, okay, so first of all, a lion or a martial artist or somebody who's trained to fight, whatever you want to call it, they have to be ready at all times to switch on in a second to go to red alert and to deal with the challenge that they have to deal with. My periods of focus come from right now. I can really just tell you what's going on right now is actually several months of fairly intensive struggle, like figuring out what is happening, what is going on in the world, how is the world changing, how do I need to deal with it. It is depressing, not in an emotional way, but in an energy way. It depresses the energy because it's like carrying this huge burden of what am I going to do? Well, I've actually had a eureka moment, a couple of eureka moments, and literally yesterday threw that switch. And so this is how I do it. This is how I'm doing it this time. Same principle. I'm familiar with the Hitchhiker's Guide to the Galaxy,
Yes.
Douglas Adams.
42.
So there is one scene in Douglas Adams where they are fleeing from some attack. I forget exactly what it is. And so one of them switches on an emergency inducer. So what's the emergency inducer? And it's like, I think it gives him a broken leg. And one of the characters says, what are you doing? He says, yeah, well, if I was completely fit, I'd be limited. But with this handicap, I'm now super motivated. And it's like I've got this incredible adrenaline. And so he goes incredibly fast, right? He switches on a extra layer of urgency. So that's exactly what I do. So what I did yesterday, I've decided to formulate and take on a different theme with my podcast. It's a small example, a different theme with the podcast from what I've been doing. I'm going to be interviewing economists and renowned experts on on the real estate industry to look at what's going on through the lens of real estate. And so I figured, okay, let's just get on with it. And from that, you get a lot of content and communication, and we'll build up the YouTube channel and more on LinkedIn. So I emailed, I don't know, a dozen or so people yesterday, got half of them responded, booked calls for next week and the next week after. And now my schedule is full and I am now forced. It's like having an exam. The exam is on, Monday at 3. You got to show up. Okay, now I've got all these calls. I got to show up. I've started to activate my entire team and getting them working on it and preparing for it, because we're going to try and deliver these things within 24 hours. Because, what you talk about the economy today could be completely different tomorrow. And so I've just created urgency again by setting, a schedule that demands me to show up and getting my team ready to go.
I think the whole notion of commit now and figure it out later is very powerful because it forces, it's like an emergency inducer, as you say, right?
Yeah, exactly. Yes, it does. It's like it's inducing. That's right, inducing urgency by creating tasks that other people are relying on you to show up for. Well, you can't avoid that, right? So you got to show up. You got to be prepared. Then you got to do follow up, and then you got to be ready for the next one. And it just, that's how you create momentum.
Absolutely.
And also selling properties and going into escrow. I mean, there's all kinds of other stuff going on at the moment that also have very strict deadlines and timelines.
Right, right. And I'm sure on the real estate side, a lot of people already know and have a lot of the context, but today that's why I wanted to dive a little bit deeper on sort of your decision-making process, how you think through things, because I think when you zoom up or when you zoom out and see the more successful people, the one thing they all share in common is mindset. It's how they make decisions, it's how they connect the dots. So I think there's always something valuable to learn in that sense.
Yeah, it is. And I think that's probably how some of the really motivational people motivate, is that they have tapped into their truest, deepest selves and are able to articulate that. So when you talk about looking at other people who are successful and motivated, if you were to ask them what motivates them and what really drives them and what are those triggers and drivers, they may not know. I mean, it's difficult. You asking me these questions is forcing me to actually think about it. I've actually found, Leo, you and I met on LinkedIn. I've actually found that my last 8 months on LinkedIn, which is the time I've been really intense, I started with kind of vanilla content, inoffensive, whatever,
It's
vanilla content. But what I've found happening is that it is forcing me to think more about how I think and what I think about things, and to articulate to myself more what am I thinking and how am I reacting to that, because I want to share uh, those that process of dealing with life's problems and with the real estate industry with other people. Because what's remarkable is when you get there and you start sharing it, you realize there's a lot of other people out there who have the exact same feeling and the exact same experience. And when you articulate it, like I said right at the beginning, there's this palpable sense of relief that they have. Oh my goodness, I'm not alone. This person just said exactly what I think. I've not been able to articulate, but thank you for saying it.
I think it takes courage to speak your truth, but it's also incredibly important because that's all we have, right? We all only have our own truth. I mean, it might not be the ultimate truth, but it's our truth. And that's why being authentic pays on social media. People follow these other creators because they're compelled by how they story tell the truth.
I think of this in the sense of the bell curve. You can be really timid about expressing your point of view because you're afraid people won't like you for it, right? It's kind of you make yourself vulnerable actually when you share these perspectives. And so there's imposter syndrome and fear of seeming the fool or whatever. But you gotta think, especially online, where everybody can see what you're saying. Like this podcast, right? You put this out, you'll share it, you'll break it up, you'll compound it into different pieces, and God, who knows how many millions of people have the potential for seeing it, right? Well, you got to think when you think in those terms of the bell curve. The bell curve. The only people who matter on the bell curve, right? You've got all this group in the middle who could care less, right? They're indifferent. But as you move out to the second and third, particularly third standard deviation, at 0.1% of the population on the left side of the curve, those are the people who think you are a total loser and really don't like you. But for every one of those, there's somebody on the other side of the curve who thinks, I, I get it. I like what you say, and I want to be in your world. I want to invest with you. I like the way that you think. I am predisposed to working with you before they ever meet you. And that 1.1%, 1 in 1,000 people when you're dealing with millions potentially, that's all you need to change your life.
I think that's what a lot of people don't fully understand when it comes to social media. Yes, the internet and social media makes permanent because it's always on there, but as long as we keep expressing our truth, then people will realize that we can have opinions and thoughts that change over time. As any iterating human being does, we seek the truth and we learn new things, right? So, with that being said, it's wonderful having you on, Adam. Any last words that you want to add before we wrap up?
Only, Leo, that I am really happy that we met, actually.
Likewise.
I remember reading a couple of your comments when we started to get to know each other, kind of, you know, via LinkedIn, and thinking, gosh, this guy is really, really intense, actually. It's the one thing you said, why is this guy? But I am deeply grateful for having had the opportunity to meet you and to get to know you. And I really hope I look forward to our friendship developing and evolving over the coming months and years, Leah. Seriously. I don't often say that, but it's nice to
Thank you.
nice to
I
meet you.
really appreciate that. Likewise, likewise. Thank you so much, Adam. And yes, as we round out the podcast, how can people connect with you and maybe
All right.
become your friend?
All right. So this really the easiest way is to go to gowercrowd.com. That's my website, GOWER crowd, gowercrowd.com. And I have a newsletter. It's free. I put it out every month and every week, sorry, once a week. And as soon as you get one of those newsletters, hit reply if you want to say anything, and I'll get back to you.
Amazing. Well, thank you so much for your wisdom, Adam. This is a great episode of The Journey, and I'll see you all next time.
Thank you.
All right.